Hello, chart watchers and Decision Point faithful. Welcome to this Monday, December 14th, 2020 episode of Decision Point. I'm Erin Swenlin, and I am here with my father, Carl Swenlin of DecisionPoint.com. And it's our job to prepare you for the week ahead. And I think we'll try and prepare you for the year ahead since this is the end of the year. This is going to be our last program, live one, for this year, but I do have two great Decision Point shows that I pre-recorded on investment horizons and chart components that we use here at Decision Point. So you'll definitely have some holiday viewing available to you, even though this is our last live show, if you will, before the new year. How is everything going up the hill with you, Dad?
Pretty good.
Pretty good.
Yeah.
The heater's working now, so you probably are in a lot better shape.
Right.
Of course, we get the really bad cold snap, and that's when our heaters decide they don't want to work. All right, well, let's look at the agenda, December 14th. Like I said, we're going to do, of course, our regular overview of the SPY S&P 500, show you what we're seeing there. And then, like I said, because this is the finish of 2020, thankfully, we're going to look at pretty much what we cover. We'll look at the major indexes, definitely with an eye toward next year and looking at what has happened this year for the major indexes. We'll cover the big four. For those of you who are Decision Point followers, you know that that is dollar, gold, oil, and bonds. And then a little bonus in there, we'll show you gold miners. And then hopefully we'll have time to go through the sectors as well. And at the end of the program, I do have a diamond of the week for you that I think is very interesting. However, as I've been telling my diamond subscribers, with the market beginning to make that turn, and I know Carl and I have both been feeling that the negative coming through here as far as those overbought conditions, we've had negative divergences. Quite a few things are telling us that we're going to have a very difficult week and possibly finish to the year. So we'll be talking a bit more about that as well. But I have a diamond of the week for you that you could possibly look to in the Santa Claus area timeframe here. All right, before we get started and looking at some charts, I do want to let everybody know that we do have a holiday special. You can save 15% on all of your subscriptions at Decision Point if you use the code HOLIDAY 2020. So for example, this is for both the Decision Point Alert and Decision Point Diamonds. It is now $68 a month instead of $80 a month. So if you haven't subscribed, recommend you do. If you know somebody who might like this as a gift, we certainly can set that up as well. All right, so I'm going to look at the Decision Point sector scoreboard. I do want to give you a heads up, though, that both, let's see, of the big scoreboard indexes, we had the S&P 500, the OEX, and the Dow Industrials all get PMO sell signals today. We already had seen them topping. That's what we're seeing on the NASDAQ 100, but we just don't quite have that negative crossover. As far as the sectors go, everything's still on buy signals, but I'll tell you, if you look at all of them together, and we will, you'll see that, again, very overbought conditions, a lot of turnover as far as that momentum shift. We still have XLE on a sell for the long-term trend model, but as you'll see when we get to that chart, we're getting kind of close at this point in terms of the 50-day EMA and the 200-day EMA. We've almost got the 50 back above the 200-day EMA for XLE, and it has been a very, very long time since we've seen that. But we'll look at that sector chart a little bit forward in the program. All right. Let's go ahead and move on and look at some of these amazing charts. Okay, so I'm going to start off like we usually do with the 5-month candlestick chart. And, you know, here are the problems. Number one, PMO sell signal. We were already seeing this tipping over, and that happened, of course, at this top right here. We continued lower. It looked like we were going to have a pretty decent day, but the market kind of fell apart at the end of the day. You can see that volume on the OBV, we're really seeing a lot of this heavy negative volume when put together on the on-balance volume. Don't want to see that. And then the other thing to note is the VIX. And currently, Friday and today, we had that lower Bollinger Band punctured. And this is on our inverted scale because typically oversold, overbought at the top. And so this is an oversold reading, right? We're getting the puncture. And generally, when you get those punctures of the lower band, that's going to tell you you're going to have an upside reversal likely. The problem we have right now is that these bands have gotten so squeezed that it's very easy for the VIX to pop above or below. And so I don't really put a whole lot of emphasis on the punctures at this point. But I do want to note that, of course, today we had that VIX actually closing below that lower Bollinger Band, again on the inverted scale. What I was pointing out in my trading room was the fact that this really has the feel, if you will, of what was happening right before the October when we got that big move to the downside, because you had the below the EMA on the VIX, and that is a negative sign in the short term. And then you can see where the band started to expand. It didn't work out for us that we had those lower band punctures. And I think that's exactly what we're looking at right now. And with those bands just barely beginning to widen a little bit, I suspect we're in for something like we saw back at the end of October. So just
had the same thing in August too, you know.
Absolutely.
But repeat.
Yeah. And so you get all excited, right? You're thinking, oh, we got a little pause, you know, and we did get that pop. But that was an exhaustion. That was definitely not an initiation. And of course, that's where we saw everything fail and the band started to get very, very wide. So that's
another thing is the OBV. You'll notice that the OBV in November, December tops there. They're lower than the top in October at the one in September.
Right.
So that's a negative divergence on volume
as well.
For sure.
Yeah. So I think that, you know, seeing the change today on the S&P probably wasn't a big surprise for you or for me. All right, I'm going to do a quick look at our Swenlin trading oscillators, and then we can start looking at some of the overview of what we're seeing on those monthly charts and what we might want to look for going forward. I think this chart really tells it all for the short term. We now have negative readings on the Swenlin trading oscillators. They're still honestly mostly in neutral territory overall. You know, if you're in a nice strong bear market, that could be oversold, but I would have to say, given the weakness we're seeing and that turn, I suspect we're going to see something similar to what we did back here at the end of October. One of the things I pointed out to those in my trading room as well is that, you know, there are a lot of bulls out there and they suspect, you know, we're on the support level and we're going to get that kick to the upside. The problem I have with that is that less than 1/4 of the S&P 500 stocks have rising momentum. Think about that. Less than 1/4 have rising momentum. You're not usually going to get big rallies when you have declining momentum. And so in order to fuel a rally, the participation just isn't there right now. We're getting more stocks rather than less stocks with rising momentum. That'll be one of the indicators I'll be watching very closely, because I think that really tells you the story as to whether we're really at a reversal point, and I just don't see it right now.
I was thinking we might last till the end of the year, and it's still possible, but yeah, it's really looking like we're gonna get a reversal here. I don't know how far down, you know, but it's certainly at least like what we had in September, I would say.
Yes, agreed.
But it could be a lot worse.
Mm-hmm. So yeah, for now, caution for sure. I've definitely been waving the caution flag. All right, so let's go ahead and look at a couple of these longer term charts. All right, so these are the global markets. I mean, we could make some comments on this just in general, I would say. One of the things that, you know, I would note right off the bat is the fact you can see that these bull market tops for most of these, the price hasn't come up to even test those levels. So Japanese, the Nikkei is done that. We did that. We managed to get above our bull market top. And India looks like it's starting to make a nice upside move. I mean, if you look at all of them, I have to say the Nifty 50 looks better than just about all of them on that nice rising trend, whereas everything else is starting to look like it's topping over. So something to consider there. All right, so we're gonna look, actually I'm gonna show the daily chart very quickly just because I wanna show the PMO sell signal that came in right here, negating that buy signal from early November. But let's look at a monthly chart. And so on the DecisionPoint scoreboards, the only red arrow that we've had was the Dow Jones long-term PMO. And should this stay to the end of the month, we should be getting a buy signal coming in on the Dow monthly chart. Typically, when we get these buy signals on monthly charts, sometimes they come in late. I would say a lot of times they do. But generally they do precede, some nice movement here. Although I have to say, we were just about ready to get that buy signal back here, and we sure know what happened at the beginning of 2020, even after that near positive crossover. So what you're going to see, I think on most of these monthly charts, am I correct, Dad, is a lot of broadening formations. These are bearish patterns, and I've been studying a little bit more about them just to get a feel. And, we're at the top of this broadening formation, not that we're going to come down and maybe test the bottom of it. It's certainly possible to keep this pattern going. But the main thing is that you're getting more and more volatility in these broadening patterns. And as I showed you on the VIX, when volatility starts to increase, that's usually a bad thing. It doesn't generally result in high volatility is not generally associated with a strong, you're not usually going to see a reversal in trend off of high volatility. It's usually going to be reversing an upside trend. So I'm not really liking the monthly charts going into 2020 or 2021 at this point. All right, so this is the NASDAQ 100, the tech-heavy NASDAQ 100. And, one of the things we found this year is that technology isn't so much classified as an aggressive sector necessarily. We're finding that it's even becoming a little bit more defensive, at least in terms of the virus and how we've handled COVID. A lot of shift has taken place back into the home office, et cetera. And so the technology companies are certainly benefiting from that and have this year. Coming out of that bear market low, they really have led the way. And you can see just looking at this monthly PMO, the difference between this and the Dow, which we had just looked at. We are on that kind of parabolic look though, aren't we?
Yes, indeed.
And well. All right, so the S&P 100, just look at that really quickly. It looks very much like the others. Again, still on that buy signal. And you can see we did pop here in December above that resistance level, but we'll have to see how we finish the month. Santa Claus might help us out and keep us above that area. And then here we go with the S&P 500 monthly chart. And actually, I think I'm going to take it back to our live chart list for this one. So tell me about this chart. I've been doing a lot of talking. I want to hear you.
Okay. Well, you notice we've got, it's still a rising trend line that is intact since the 2009 low. And of course, you pointed out the megaphone effect that we have. But, well, you can't see it on this chart, but there is absolutely no fundamental value holding the market up. Okay, we've got a PE of about 35, and as I hear, tons of bullish talk. I mean, next year is going to be monstrously upside. Maybe it will be, but you follow the trend as best you can do. But just keep in mind, there is nothing under there holding it up. There's no value holding it up at this point.
No.
Yeah.
I think it tells the story.
There, the top of the range is for the value range. The red line being overvalued, and it's just well, go to the. There's also the fundamental chart right around there. Yeah, short term, yeah. And what do we got today? Okay, we got almost 37 PE. So,
yeah. So very overvalued. There still has to be something underneath, to hold the market up, and they don't just go up forever and ever. And this was extraordinarily painful. But if you recall, that was extraordinarily painful when that happened. That was extraordinarily painful when that happened. So it doesn't need to be necessarily a giant drop like this to be very painful and pose problems. And the issue a lot of times too is once you get started, the momentum and the fear can just push prices lower and lower and take everything with it. I don't think I'm telling anybody anything new as far as the trouble and the pain that is associated with some of these declines. All right, so we looked at the big ones, the big indexes. I think I'm gonna actually pass it to you to look at the big four, but I would just say, overall, when you're looking at these indexes, I mean, for me, going into 2021, I'm like you. I mean, there are a lot of bulls, it's just going to be an unbelievable year. But it seems to me that, we coming out of the virus, we kind of did our thing coming out of the virus, if you will. I don't know how much more is left as far as, hey, the virus, we've got this under control and now we're going to have a big year. Seems to me we've already been booking a lot of that.
Oh, it's we haven't even digested all the problems that are still building up. The loss of all the small businesses that are still being killed by this situation. So, yeah, I can tell you one thing: nobody knows how this is going to come out. It's not going to come out well, but people are thinking there's going to be inflation. And I heard a little spout on that this morning. But it's just, yes, could be. It could be a lot of different things. But I don't think we've ever been in a situation where the debt has been so high and the market valuations are so high. I just scares me to death.
Yeah, it's not a good situation going into next year. It really isn't.
Let me, I was going to show. I wrote an article and published it on when the market was open on Wednesday. That was this day right here. That I was saying this rising wedge is most likely going to resolve down. But the very next day, the market rallied, and pushed this line up a little bit. Mm-hmm. It's like just leave it to me to take a position, and the market's going to show me what I'm talking about. But
isn't that always the case?
But we've got overbought situations on these intermediate term indicators, and then they've been persistent that way. So we've got a pullback, somewhat of a pullback. I don't know big or little, but something to give us another low. Maybe in this area, we'll say that you can say, all right, when this comes up and the PMO turns up again, that might be a good time to get into energy. Overall, I think energy looking good. Mm-hmm. But right, the Golden Cross, which is the number of stocks in this sector that have 50 above the 200 EMA, that's still way down in the basement here.
Mhm.
And but this is why you look at the 200 DMA here, and I'm sorry, there's the 200, and here's the 50, and it's finally coming back up. It went below up over here, and it's finally getting back up there. Now, the we got a 20 over 50 crossover about a month ago, and that was giving us a pretty good signal, as we can see in hindsight, that we were going to go higher. But anyway, um, I, my article, I thought we were going to have a pullback. We are going to have to correct some to take some of the froth out of the market. This from here to here was a 50% rally, so that needs to be digested somewhat.
Absolutely. Yeah, I think a drop to the 200-day EMA is, I mean, I would pretty much expect that at this point.
Okay, let me go to the 4. And
Yes.
I've got gold up here. Let me go to the dollar first. The dollar is breaking down. Uh, it it had a looks like a reverse flag here, and you would expect this kind of breakdown out of that. So let's look at the monthly chart. Long term, this is, I would say, to catch up to the bottom of the range here, it's got a ways down to go. That would be my impression.
Yeah, I think, yeah, a lot of analysts actually are on board with a declining dollar. So I don't know. We'll see if there's a consensus on anything.
Now with gold, we started following GLD in our DecisionPoint Alert daily and weekly letter, and I'm looking at this possibly being the washout of this decline, and it's been a fairly gradual decline and accelerated here. So I'm thinking now. I wrote in the weekly on Friday that I was looking for a bottom here to come, that had first bottom here, I'm looking at a higher low, and obviously we're going to have to move that over. Let me see if I can get this with that big arrow. Now it could go lower tomorrow. This is not final, but we're looking for a higher low to come up here and give us a chance to possibly get long again on gold.
Mm-hmm. Well, 200-day EMA is right there, so hopefully it'll find some support there.
Let's look at the monthly for gold. In the context of this chart, this hasn't been very big of a pullback at all. So we could get some more before it gets better. And I noticed that the monthly PMO is trying to turn over.
And it looks like overall, I mean, correlation with the dollar, they're back kind of in the normal range, at least on a monthly basis. If we look for a declining dollar going into the next year, you can see it's almost a perfect reverse correlation. So we should expect gold to do well.
Right, and if the if inflation hits, which everybody's expecting, well, gold would be good to own, probably, and land and hard assets. I'm still not crazy about real estate. I think real estate is a mess, and we're going to have another crash. But that's just my opinion.
Yep.
Okay, on oil.
Can you
I've been
move
looking
the chart
for.
up a little bit?
Oh yeah, I can. Yeah.
Yeah.
The I was looking for this resistance to hold better than it has, but it's easing up here. Let's look at the longer term chart. the monthly. So, yeah, we're pretty beaten down
Yeah.
oil. So I think, we're going to go higher, but right now we're still struggling under the supply demand situation, mostly lack of demand because of the COVID.
Right.
Situation.
But next year, maybe that will change somewhat, and that would definitely help oil.
Oh yeah. And on bonds, um, I, I see this kind of range here as being kind of the limit. I mean, we're all on the basement with the rates, so we have some room in here for various forms of emotion coming into the market for one reason or another. But I don't see a lot of upside potential in bonds, and downside would be caused by interest rates going up, but I don't see that happening either.
Right.
Looking at the monthly, yeah, here we have a parabolic broken down, so that tells us that rates are going to go lower. I mean, I'm sorry, the bonds are going to go lower. Certainly, it's corrected somewhat and possibly, go much lower. But that would mean interest rates going up. And again, that's not anything we see or have in sight right now.
Right. Yeah, I mean, you could almost see a double top there in the thumbnail. So
I think you've got about enough time to talk about
my diamond of the week. Yes, let me grab the screen here, and I should have that ready. I'm so interested in your charts. I don't have mine ready. All right. So this is going to be an interesting one. Let me grab the screen here.
Take it back.
Yep. All righty. So this is from the communication services, the internet space. This one was just a really interesting one that came up on my momentum sleepers. So it's not the typical necessarily stock that I present, but I think this is the kind of stock we want to get in the early phase. And I think we could be on the early phase here. You've got a nice double bottom here. It's consolidated right over top of the 200-day EMA. So this looks like it'll be a pretty good reversal point. We've seen it reverse periodically from that area. And double bottom with a nice positive OBV divergence going on. We haven't executed it if it is a double bottom. But one of the things I really liked is that, if I want to take a chance on this one, I don't have to set a really deep stop, because it'll be pretty obvious if we lose that low, there's definitely, it probably has. So I really like the setup here. You've got the PMO rising at this point. So I don't know, this is a little bit more your style, Dad. We'll see what happens. But at this point in time, like we were saying, I mean, the market is due for this decline. Everything is looking weak. So even when you have these great chart setups, just really be careful. And that's why I like the idea of a very tight stop on this and others. All right, so that does conclude it for us today on the Decision Point Show, our final one for the year. But remember, you can watch the reruns that we have going as well during the holidays and some new shows. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.